All right, welcome back, everybody, to the deep dive. You know how this works by now. You send us the stuff, and we dive right in. This time around, we're taking a look at a pretty hefty document, actually. The Sanofi Annual Report for 2024.
Yeah, Form 20F to be exact. It's their yearly report for the U.S. Securities and Exchange Commission, which means we're dealing with International Financial Reporting Standards, IFRS.
IFRS, right. So the goal today, as always, is to really pull out the good stuff for you. What are the key insights? What do you need to know?
Exactly. We're going to give you the clear picture. Where does Sanofi, this huge pharmaceutical player, stand right now? What do they do in 2024?
Yeah, what are they thinking about the future? And of course, as an investor, what does it all mean for me, my portfolio?
Well, before we get ahead of ourselves, got to add the usual disclaimer. Like any annual report, this one has forward-looking statements. What does that mean? It means projections, estimates, best guesses. It's not a crystal ball, right?
Right. Nobody can predict the future. So while this report is packed with information about their plans and expectations, we always have to remember those plans can change. The future is uncertain. Results, as they say, may vary.
Absolutely. But with that said, there's still so much we can learn from this document. It's a gold mine.
Totally agree. And to make sense of it all, I guess we should start by looking at Sanofi's business segments.
Yeah. How do they break down their operations?
Exactly. The report, I noticed, kind of makes a big deal about biopharma being the core operating segment. What falls under that exactly?
Yeah, biopharma is really the heart of it. You've got all your prescription meds, the innovative stuff, and vaccines. They organize that into three franchises: specialty care, general medicines, and vaccines.
Makes sense. So R&D for all of those falls under biopharma as well.
Yep, research, development, and the actual production, the manufacturing, all happens within this biopharma segment. It's interesting, though, even after they spin off their consumer healthcare business, Opella, biopharma, will still be doing some of the manufacturing for those Opella products.
Oh, interesting. So even though consumer healthcare is kind of separating, there are still these ties, these operational links.
Exactly. So think of biopharma as this powerhouse, the engine driving their main pharmaceutical and vaccine efforts.
Okay, that's a good image. Now, the report also mentions these strategic costs initiatives that started back in October of 2023. What's the deal with those?
Well, the timing is interesting, isn't it? Right before the start of the year being reported on. What's even more interesting is they're directly linking these cost-cutting measures to actually increasing R&D investment.
So cutting costs in some areas to free up resources for more research.
Exactly. It's a pretty common move in pharma, especially when you're facing those patent cliffs, blockbuster drugs losing exclusivity, generics hitting the market. You got to find those new revenue streams.
Makes sense. So how are they planning to improve that cost structure?
The report's a bit vague on specifics, but the goal seems to be twofold. First, free up that cash for R&D, like we said. Second, modernize how they deliver their products commercially. Get those drugs and vaccines to doctors and patients more efficiently.
Okay, so streamline operations to fuel innovation and future growth. Got it.
You got it.
Now, speaking of the future, there's a lot of talk in the report about digital transformation and artificial intelligence. How big of a deal is this for Sanofi?
Oh, it's massive. They're pumping serious money into integrating digital tools and AI across all their units. We're not talking about automating a few tasks here and there. They're aiming for a fundamental shift in the way they work.
Okay, so it's pretty ambitious. What exactly are they doing with these digital tools and AI?
It's a long list, but to highlight a few. Speeding up drug discovery. Think like crunching massive data sets to identify potential new drug targets. Then you've got clinical trial design. AI can help optimize patient recruitment and trial protocols. And on the manufacturing side, AI can streamline and optimize those super complex supply chains.
Wow, so it really touches everything.
It does. And to top it all off, they state their ambition, and I quote, to become a leading digital healthcare platform. That tells you right there how important they think this is. It's not just a side project.
Yeah, it's a core part of their strategy. I wonder what that digital platform will actually look like, though. That's pretty intriguing.
Yeah, lots of possibilities there. Okay, so we've talked business segments, we've talked tech. What about the warm and fuzzy stuff, the CSR?
Yeah, their corporate social responsibility strategy. They do make a point of mentioning that in the report. How does that fit into their overall goals?
They actually do a good job of weaving it into their play-to-win business strategy. It's not just a separate thing. They've got these 4 pillars to their CSR strategy, and each one ties back to their business objectives.
All right, let's hear those pillars.
First up, affordable access. This is about making their treatments available globally while also and this is important, supporting sustainable healthcare systems.
Okay, so access to medicine is a big one, for sure. What's next?
Pillar number 2 is R&D for unmet needs. Focusing on those areas where there are still big medical challenges, the ones that need, well, unmet needs.
Right, makes sense. Innovation way it matters.
Exactly. Then we have Planet Care, which is all about environmental sustainability across their operations.
Good, can't forget about the planet.
Oop. And finally, it's in and beyond the workplace. This one focuses on supporting employees, fostering diversity, all that good stuff.
Right, so taking care of their people. Sounds like they're trying to be a good corporate citizen overall.
Yeah, it's not just about profits, it's about the broader impact.
Makes sense. Now, let's talk products. I gotta ask about Dupixent. This drug seems to be killing it.
It's a superstar, and it just keeps growing. Especially in the U.S., they reported a constant exchange rate, or CER, growth of over 17%. Remember, CER is a way to strip out the effects of currency fluctuations so we can see the actual underlying growth of the business.
Okay, so even with the dollar going up and down, Dupixent is still seeing huge growth.
That's right. And it's not just the U.S. They're getting approval for new uses, label expansions all over the place. Hand and foot dermatitis got the green light in both the U.S. and Europe, asthma treatment in China. They even have a phase 4 study, Vestige, looking at airway remodeling in asthma. Oh, and I almost forgot, it's also indicated for prurigo nodularis, that really itchy skin condition.
So they're racking up the approvals. No wonder it's doing so well.
Exactly. And don't forget, this is a drug they co-developed with Regeneron, so it's a really important collaboration for them.
Yeah, definitely a bright spot for Sanofi's specialty care business. What about some of those newer drugs they're launching, like Beyfortus and L2-UVRO?
Beyfortus and L2-UVA both off to a fantastic start, especially in the U.S. These launches have been really successful, adding a lot to their 2024 sales already.
How much are we talking?
Well, Beyfortus, the RSV prevention drug for infants, brought in a cool $1,068 million.
Wow, almost €1 billion. What about L2-UVA?
L2-UVIO, that's the longer-acting hemophilia A treatment, pulled in $617 million.
Okay, so not quite $1 billion, but still pretty impressive.
Definitely. And these new launches are vital, right? They help offset the inevitable declines from their older products facing competition.
Right. Got to keep those revenue streams flowing. Speaking of older products, how are some of the more established drugs doing?
It's a mixed bag, as you might expect. Some, like Kevzara and Praluent, are still growing, but others, well, they're feeling the heat. Generics and biosimilars are eating into their sales.
Anyone in particular?
Toujee, their insulin product, is one. And then, perhaps most notably, Lovenox Clexane, those anticoagulants. They got hit hard by this competition, like $794 million in lost sales in 2024.
Oof, that's a big chunk.
It is. That's the reality of the pharma world, though. You got to keep innovating, replacing those older products with new ones.
Mike, can't just rest on your laurels. Now, Sanofi is also a major player in the vaccine game. How's that side of the business doing?
The vaccines are a good story for them. Solid, steady business. The report highlights their dominant position in pediatric vaccines especially.
Yeah, like the combo vaccine.
Right, the combo vaccines. Tetraxam, Penicel, Quadracel, ACT-HIB, all big names in pediatrics. This segment provides a certain level of stability to their revenue. Plus, there's always the potential for growth with new vaccines in development.
Okay, so steady and potentially growing. Sounds good. Now let's talk research. The report mentions a pretty significant jump in R&D spending in 2024. What's going on there?
Yeah, that's a key takeaway. $7,394 million went into R&D last year, up from $6,507 million in 2023.
That's a big jump, like almost €1 billion.
It is, and it represents a whopping 18% of their net sales.
Wow.
It's a clear signal, right? They're serious about innovation.
Serious about growth. So where are they focusing all this R&D muscle?
Strategically, they've got their sights set on a few key areas: immunology, rare diseases, neurology, and of course, vaccines. Interestingly, they're actually scaling back on oncology research.
Oh, backing away from cancer. That's unexpected.
It is, yeah. It might be a reflection of, how competitive the oncology space is.
Yeah.
But they probably see greater opportunities, at least for them, in these other areas.
Okay, so betting on their strengths, are they highlighting any specific projects in these areas?
They do mention a handful of phase 2 and 3 projects that they're excited about. In immunology, think ulcerative colitis, various inflammatory conditions, alopecia areata, lupus, type 1 diabetes, asthma, chronic rhinosinusitis.
Wow, that's a lot.
Yeah, they're busy. In rare diseases, they're tackling things like warm autoimmune hemolytic anemia, alpha-1 antitrypsin deficiency, and a bunch of others. Oncology, they still have some projects going on, but the focus is clearly elsewhere now. And for vaccines, they've got some promising candidates for RSV, HMPV, and yellow fever.
So a full pipeline, even without that big oncology push. Now, R&D isn't just about starting new projects, right? It's also about, making tough choices about what to stop.
Absolutely. Sometimes you got to kill your darlings. The report does mention that they discontinued development of losmapimod, which was aimed at facioscapulohumeral muscular dystrophy.
Yeah, that's a tough one.
It is. They also stopped work on a couple of vaccine candidates for E. coli sepsis and the flu.
It's part of the process, right? You got to be ruthless. Focus on the projects that have the best chance of success.
That's the name of the game. Now, while we're talking R&D, it's worth noting that Sanofi isn't just going it alone. Collaborations are a big part of their strategy.
Yeah, they do mention a few partnerships.
Right. They highlighted the one with Formation Bio and OpenAI, all about using AI to accelerate drug development. That's pretty cutting edge.
Yeah.
They also have this massive ongoing co-development agreement with Regeneron.
Ah, yeah, the Dupixent connection.
Exactly. Dupixent and Kevzara, both fruits of that partnership. And as a little bonus, they even got an R&D reimbursement from Sobi related to the European approval of L2UVI.
Oh, nice. So those collaborations can be financially beneficial too.
Absolutely.
All right, so Sanofi's busy on the R&D front, got a lot of irons in the fire. But let's talk brass tacks now. What about the financial performance for 2024? Where do things stand?
Overall, pretty solid year for Sanofi. Their total net sales hit $41,081 million. That's a respectable 8.6% increase compared to 2023. But when you factor out those pesky currency fluctuations, the constant exchange rate or CER growth, it's even better, 11.3%.
Okay, so good growth, even with all the global economic ups and downs. Which markets were leading the charge?
The U.S., no surprise there. They saw a huge 16.2% CER increase, driven by those new product launches. Beyfortus, L2UVIO, doing their thing. Plus, Dupixent keeps chugging along, and their older insulin product, Lantus, is still doing well. Europe and China, they were a bit slower.
Okay, good, but not great. What about profitability? What's the bottom line looking like?
All right, so their business net income came in at $8,912 million in 2024, which translates to a business earnings per share of 7.1 year. Now, got to clarify, business net income is a non-IFRS measure that they use. Basically, it strips out certain items to show their core operational performance.
Gotcha. So what's the actual IFRS number, the one that counts?
The IFRS net income attributable to equity holders, that was $5,560 million, or 4.44 per share. So still profitable, but the reported number is lower because of those accounting adjustments.
Yeah, those adjustments can be tricky.
They can. It's mostly amortization and impairment charges.
Yeah.
Like the cost of past acquisitions, write-downs of certain assets.
Okay, makes sense. We talked about the huge R&D expenses, but what about their overall operating income?
Operating income for the year landed at $7,252 million. That's the profit they made before interest, taxes, all that jazz.
So a healthy profit from their core operations. What about taxes?
Income tax expense, $1,204 million. Their effective tax rate came out to 18%. A little higher than last year, mainly because of changes in tax rates and, get this, the new Pillar 2 global minimum tax rule.
Oh, those rules are starting to bite.
They are. Added an extra $58 million to their tax bill this year.
Okay, so taxes are going up. Now, there's also this mention of share of profit or loss from equity method investments. What's that all about?
This is their investments in other companies, where they have a significant influence, but not full control. So they don't own the whole thing, just a big chunk. In 2024, that netted them $60 million EBITDA.
But there's a catch.
What's the catch?
They took a pretty big impairment loss on their investment in Euro API. That's their active pharmaceutical ingredients business. It was like a $77 million hit. Just shows you that even those strategic investments can be risky.
Yeah, nothing's guaranteed. All right, so we've covered a lot of ground here, business segments, products, financials, but let's talk shareholder value now. Dividends and share buybacks, those are the biggies, right?
Absolutely. Companies got to keep those shareholders happy. On the dividend front, the report points to a specific section that lays out their annual dividend policy. Now, this part doesn't actually state the exact dividend amount for 2024.
A little vague there.
They'll announce that later, I'm sure. But the key message is, paying dividends remains a core part of their strategy for returning capital to shareholders. Okay, so dividends are a given. But what about those share buybacks? They've been making some moves lately.
Oh yeah, big moves.
Yeah.
They went ahead and bought back almost 30 million of their own shares from L'Oreal back in February. That's one of their major shareholders. Cost them about $3 billion.
Wow, that's a hefty chunk of change.
It is. And that move effectively reduced L'Oreal's ownership stake in Sanofi. But here's the important part. Those repurchased shares, they're going to be canceled.
Canceled? What does that do?
Well, when you cancel shares, you're essentially reducing the number of shares out there. And that typically boosts earnings per share, which is a good thing for the remaining shareholders.
Okay, so share buybacks can be a way to increase the value of the existing shares.
Exactly. And as if that wasn't enough, they also kicked off another share repurchase program in February. This time, they're aiming for up to $2 billion in buybacks throughout the rest of the year.
So more buybacks on the horizon.
Yep. And this is on top of an even bigger authorization from their board of directors back in January. They gave the green light to buy back up to $5 billion in shares. So they're really committed to this strategy.
They are. So why are they doing all these buybacks? What's the thinking there?
Well, share buybacks, along with dividends, are a classic way for companies to give some of that cash back to shareholders. It's a way to reward investors. And when you reduce the number of outstanding shares, it often bumps up earnings per share. That's a signal to the market.
Yeah, a signal that they're confident in their future, their stock is undervalued, all that.
Exactly.
Okay, so we've covered a lot of ground here. But stepping back, looking at the big picture, what's your overall assessment of Sanofi based on this annual report?
Sanofi's definitely at a crossroads, I'd say. They're in this transition phase, pouring money into those key growth areas, immunology, rare diseases. They're also all about efficiency now. Cost initiatives, digital transformation. It's a new era.
Yeah, it sounds like a company that's adapting to a changing world.
They have to. And the financials show they're doing all right. Solid top-line growth, fueled by those new launches, and of course, Dupixent keeps delivering.
Right, the star performer.
But there are challenges, right? The generic and biosimilar competition is real. It's eating into their sales. Then you've got those ever-increasing pricing pressures, and of course, the regulatory landscape is always changing.
Yeah, it's a tough business.
It is. But they're also financially strong. They've got the cash to invest in R&D, pay dividends, buy back shares. That's a good sign.
Okay, so lots going on. What should investors be paying attention to moving forward? What are the key things to watch?
I'd say keep an eye on those new product launches. Will they keep performing? Will Beyfortus and Aldeco-U live up to the hype? And how long can Dupixent keep up this amazing growth?
Right, we need to see if those new products can really carry the weight.
Then, of course, there's the R&D pipeline. What's coming down the line? How are those phase 2 and 3 trials progressing? That's their future.
The future in the making.
Exactly. And then you can never forget about the external factors. How well will they handle the competition from generics and biosimilars? How will they navigate those regulatory changes, especially in the US and Europe?
Yeah, those are always wild cards.
They are. And finally, keep an eye on their digital transformation efforts and those strategic cost management initiatives. Are they working? Are they making a difference? Those are long-term plays, but they could have a big impact.
All right, so lots to watch for with Sanofi. It's a dynamic company in a dynamic industry.
Definitely one to keep on your radar.
Well, folks, that concludes our deep dive into the Sanofi 2024 annual report. Hopefully you're walking away with a better understanding of their business, their financials, their plans. We appreciate you joining us on the deep dive.
Always a pleasure.
Until next time.